How worried should we be about this sell-off of the stock market? Has Westpac turned the corner? And given the sell-off, what is Paul Rickard's very, very best buy? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, there's a lot of panicking going on out there at the moment. Is the panicking exaggerated and unnecessary?
Well, look, I think an interesting day yesterday in the Australian context. That was a good bounce. I think the bounce yesterday was fairly predictable,
Yep.
Pete. I said about 10:30. That's probably well the bottom for the day.
And a big sell-off by 10:30.
And it was, by and large, that. Obviously the lead's coming out of the States. And last night a bit cool in the US. They're worried about inflation. Looks like the numbers should be down tonight. So, and a few predictions coming up saying that core inflation has peaked in the US. So,
Which I've been saying for a while. I hope I'm right.
Yeah. So look, I mean, if it's another really bad number tonight, down goes the US. So we're in that sort of cycle. So I think we're going to do some work here around the 7th. Coming back domestically, the US is going to do. It hasn't given up on the fear about more Fed and more aggressive Fed and higher inflation. That's going to take a while to work through the system. We're going to have to work through ours as well, Peter. So some choppy days ahead. I don't think we've bottomed yet in the correction, but we're going to do a little bit better in the next couple of days. I sense.
Yeah, I feel as though for the next 2 months or so, there's going to be volatility, and the volatility will be on a downward trend, and then we'll start going upward trend if the inflation numbers start looking good. If then people start saying, well, maybe the bond market's gone too far in predicting these higher interest rates, as they pull back, some of these tech companies might look like good value again. And we saw tech stocks were bought overnight. So that kind of thing, it's going to be like a ping pong game between inflation, is it as bad as we think, and will interest rates have to go as high? But what I found really interesting, an interesting number I got last night, if you take out all the tech companies' imbalances on the S&P 500 and you equal weight every company in there, the PE is only at 15, which is a low number. Currently it's too high, and that's part of the reason why there's been a sell-off. So I think that we are in the bottoming process. Totally agree. And
the other factor we shouldn't discount locally, Peter, is we've got an election to get through. Now, we know after elections markets used to do better, but if Albo gets in, the market really hasn't been too bearish about Albo so far. It's been a very small target. I just sense we may just get a little more concerned, particularly about some of these policies coming out, with wage increases. Don't discount offshore just getting a little negative. Should Albo be elected in a week and a half time? So that's why I'd be a little. I don't think it's yet the right time to pile into the Aussie market. That's what I'm saying.
The point I would make, Paul, is that if you went in now, I don't think the downside would be so great that your losses would be there for a long time. If you bought, say, 2 months ago, yes, but if you're buying now, I think there's not much further to go down. That's my best bet. Westpac, has it turned the corner, Paul?
Well, look, it was a better result, Peter. I mean, better than the market expected, largely because of a bit more aggressive action on costs.
Yeah.
And look, it had some one-offs as well, so you've got to be a bit careful saying Westpac's turned the corner. A lot lower investment expenses in the first half compared to the second half, so they're going to come back. And again, as we've seen before, it's very hard to sort of cut your way to glory, right? Now, Westpac at least has maintained its very ambitious cost-cutting target to get to an absolute cost base of $8 billion by 24-25. The other banks have abandoned theirs, so they give Westpac some credit.
Yeah, but, and you've been bagging Peter King, so this is you being nice to Peter King.
I'm being a bit nice, but maybe that's the easy part, and we've got to see some growth. We need to see, the thing that National Australia Bank is doing is actually growing their book, right? They're out there competing, whereas someone like ANZ, pretty much asleep at the wheel is the way I described ANZ. So look, Westpac, better than expected. Some positives in the result, but it's too early to say that Westpac has turned the corner.
Would you be happy to buy? Would you be happy to buy Westpac going forward? Look,
I think we know the banks. There's rotation between the banks, right? Collectively, they don't have that dissimilar strategy, right? So, over time, the cheapest ceases to be the cheapest, and the most expensive tends to sort of get dragged back to the pack a little bit. So, I think NAB's still the best of the three non-CBA banks. ANZ is the least interesting to me. Westpac, I'm about 50-50 on it. I think it's, it was down there at $20 a couple of months ago.
It was even 17 not long ago.
So look, maybe, I think I wouldn't get carried away with Westpac at the moment.
Okay, let's go to the next big one, Paul. Given the sell-off and given your view, what is the very, very best buy in the market right now?
I think right now, Macquarie, Peter, it was $205 last week. It's $180 this week. It seems like the market's just said, look, that's a fantastic profit report last Friday, but that's as good as it gets.
Yeah.
It's going to be more difficult going forward, and it probably is. And also, you know, the things that we're seeing in the US are going to potentially impact Macquarie's business because 70% of its earnings now come from offshore, not in Australia, and a hell of a lot of the earnings come out of its global markets and commodities division. That's from trading, right?
Yeah.
If trading becomes more difficult because commodity prices aren't going through the roof, there's less client interest, or alternatively, you know, bond rates go up, that means, you know, some of the corporate activity potentially slows down. Yeah, that impacts some of their markets-based businesses, and I guess that's what the market is saying. But you know, if you think the US market maybe is sort of showing signs of, you know, forming a bottom, Macquarie's a great buy.
Yeah, I think if the S&P 500 can make a comeback sometime this year, later this year, I think there will be a summer rally in the US. Macquarie will be a beneficiary. Its highest price I remember is about $215, Paul. It's at $180 now. That would be a 20% gain if they could get back to their old high. And my view would be, even if you bought it and it went up and then went down, it probably wouldn't go much below 180, 150 anyway. So it'd be another chance to buy
they also
a good
gave
company.
what the market attributed as pretty conservative guidance. Now Macquarie does that, right?
Yeah,
because when you've got markets,
Under promise, over deliver.
when you've got markets-based businesses, you know, it's very hard to forecast what it's going to be. You can't control the external environment, right?
Yeah.
We've seen that before with Macquarie. But you're right. You know, Macquarie it's a bit like CSL.
Yeah.
It has that tag about under-promising, over-delivering, and it has done that year in, year out. So I don't think
since the 1980s.
I don't think you put too much notice of conservative guidance. So that's mine. Peter, what's yours?
So my best one, because I was going to say Macquarie, but my second best would be Xero. I think Xero is a great small business, real business company. I think most small businesses that start up nowadays will roll straight into Xero. Nearly every analyst on our show, when we ask them what tech company would they be buying now, they say Xero. Tech will make a comeback, but it will be the top quality companies. And I think Xero, it looks like a fantastic screaming buy at these levels. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.